So it appears as though the chop area that we identified in our last video has been respected. There could be an opportunity to find a potential long zone in the coming sessions, and the immediate short-term time frame combined with the 5-day statistical backtest may just reveal those targets. Welcome back on this cloudy Saturday. This is ARCa, and let's dive into ticker symbol COSM. Let's kill them, team. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive in straight to COSM, as there could be an opportunity for a long zone. And we're going to be using a combination of the immediate short-term time frame and the 5-day volatility versus momentum backtest that I've performed throughout the entire trading history of the COSM asset. So let's just go ahead and go over that criteria right now, or the context behind it, so that you are in understanding of what happens, right? So anytime that volatility has expanded into this critical level here, which is the 90 percentile, and started a contraction phase, I have taken note of any time that has happened paired with stochastic momentum's upside pivot. So I guess just to put it to you in a very, very close example. So when that criteria happens and we start contracting towards the downside, I take note of that duration of the iteration, right? The upside thrust from that iteration, and the amount of times that the profile, volatility versus momentum, have guessed the upside correctly versus incorrectly, historically speaking. So in this case, right, I know that a lot of you have already heard of this. I know it's like a broken radio. We have to just point it out for the newcomers, right? So in this case, we have 6 out of 6 iterations which were guessed correctly to the upside, which gives us naturally an average upside accuracy of 100% with an average upside thrust, aka the mean, of 162.05% over the span of about a massive 116 days. So I've also performed the standard deviation calculations from this. If you're familiar with statistics, then you are kind of looking at the bell curve, right? I know this is a little ugly here, right? But if you are focusing on 68% of the results, then that would be this zone here, marking off the average performers, right? So I've taken note of that calculation, as well as the upper bound and lower bound performers too. So let's go ahead and take a look at that now. The standard deviation from a 162.05 mean, you're looking at 373, about 373.5% move to the upside based on the 68% of the performers, with a lower bound of the first standard deviation, which is honestly the one that I'm focusing in on. The 78.10% move to the upside based on the firing of the signal, which, by the way, it has not been fired yet. So we need the criteria to absolutely meet, and we have to do it, because the thing is that if it doesn't meet to the area where I backtested from, then this is entirely invalidated, okay? We can see that we still have an upside trajectory from the moving average, and the volatility component is starting the curve. So if this volatility component does not at least touch the 90 percentile or the 90% line of volatility, then this move will literally be invalidated, okay? So the upper bound of the first standard deviation is leading to a massive 668% move to the upside. That is not something that I am willing to speak of right now, and I am not willing to touch on those targets just yet. Although we have before, I just feel like we have to focus in on the more realistic targets, which would be anything between or within the 78% bound. So if we are saying that this, let's just say, for example, that we get a little bit of a short-term pullback, and that pullback increases volatility to the upside, then that means that we have then fired the signal, because the upside momentum is still present in the 5-day time frame. It's very hard to manipulate the momentum indicator here, because it is reliant on a 5-day turnaround. So it's a macro scale, right? So it does take its time. It does take a lot of pressure. So let's just say that we were to fire the signal back here from just for an example, just for a quick example, 122. Let's put together that upside move to 78%, right? So if that happens, then we would be essentially looking at a topside target of around 219. So that's already indicating that we would in essence recover the $2 mark. But of course, we have to pay attention to the relevant areas of resistance. For example, here, This is clearly one of them, right? So we can go ahead and just note the fact that we do have the space between 198 and 170 to look at as resistance. And of course, it would be 198 because it is a psychological target. That is a target where people are going to naturally take profits from because it's going to the $2 mark, and everybody feels like it's going to sell off from there. Sure, that is a possibility. So in this case, right, we can see a touch of the 198 to $2, pull back to a relevant area of support, then continue on to the upside. Simple as that. All right. So, and yes, I am essentially saying that I am expecting a little bit of a pullback coming in, which is why this could be presented as an opportunity. First of all, we can see here that we're riding this ascending triangle, right? So this ascending triangle does have, I already spoke about this resistance, and I already spoke about the pullback coming in from this area. So don't act brand new to this. This is absolutely something that I'm still honoring. First of all, we have the 4-hour EMA 55 located right within an area of resistance that we have already spoken of. Okay, so that zone of resistance is located between 143 to 177. Okay, so if we do get an upside beyond this EMA 55, then there is a probability to where we can touch that 147 before a pullback, and we could eventually come back down either to the zone of around 126-ish to maybe even where the SMA 50 is located at around 130, right? So that's around where I'm talking about that we can face a potential opportunity. So why don't we just kind of note it down, and I'll just practice here incredible discretion just so that I can show you what I mean. So let's just go ahead and correct that target to, let's see, would that be realistic enough? Hold on just a sec. Yeah, actually, you know what? Yeah, 128 to 124. That could be the bounce zone before us continuing on to the upside. First of all, yeah, wait for the resistance here. Wait for the pullback. This is not a zone where you want to get long the asset. This is an area where you may potentially consider risk off, right? So get that push to the upside, get the pullback, and of course, we're speaking about paper trading here, right? Go ahead and make sure to click on the description below and sign yourself up to with an account of TradingView software, and make sure to connect right over here where it says paper trading. Connect, right? And this is where we train, right? So let's make sure to keep retail safe. So yeah, I'm really feeling that could be the case here. So we'll validate these things here. Okay, so now giving you the weekly outlook, right? This is the macro time frame descending broadening wedge that we've been riding for quite some time. It's still showing that there's buy side interest here, right? So it's still looking okay. We've already acquired 1, 2, and 3 tests of the golden rule of 3, which is usually test 1, 2, and 3 of resistance, capitulation, reaccumulation, breakout on true test number 4 or 5, and then continue onwards and upwards, right? So again, I don't feel comfortable in speaking about these targets just yet, right? Because this is very well where the statistics are leading to, right? But we want to make sure that we can take this step by step and not just rush into things. So this is the chop zone that I spoke of in the introduction of the video today, okay, team? So let me just go ahead and pull this up just a little bit like this, right? All right. So if you're still in the video, go ahead and let me know in the chat below. Let me know how good of a Saturday you're having. Let me know if everything is going okay. Right, so there we go. So this is around the time where we would be pulling back. So we already got the top side of the zone that we located a couple videos ago, right? We're now getting that pullback. It's natural. I think it is only fair to assume that we can be making some downside targets. 124 to 128 we said, right? So let's go ahead and mark it off here too. 124 to 128, just like this. Let's go ahead and put it down to the 124 level. Okay, so this is what we're talking about, right? So if we do get that, then that would essentially be following a nice line of regression. So it would be something like this here, right? Where the price action would come down to this area, maybe even wick down a little bit. Maybe we can even use this line instead of that one, right? This one here. So if we do respect that line, then the probabilities start, coming a little closer, right? So meaning that we would come back down to the area of around 120, let's see. Yeah, 124. That feels safer. So if we are following absolute regression here, then yeah, that would kind of entail that we would find a support down here. So I do find some consistency within the 124 to 128 area. Okay, so let's go ahead and now look at the next chart. This is the immediate short-term descending broadening wedge on a 4-hour chart, and we can see down here that 131 just so happens to be the knot 382. And you know already that the knot 382, or between the knot 618 Fibonacci ratio and the knot 382 is the golden pocket. So there is a nice bounce zone that we can face from there. The bottom of the zone would be the knot 236, perfectly aligned with 124. So geometrically speaking, I do believe that we can face a pretty nice pullback opportunity, get long the asset, and see what we can do from there. Now, there's a strange kind of correlation happening between. I'm not understanding. Hold on just a sec. Let me make sure that the IWM is posted here. Okay, so I can see that there was a recovery now, right? So I was finding it difficult to see that there was a huge capitulation on the Russell 2000 ETF versus, well, I mean, this is spot price action, right? Versus the Russell 2000 index futures contracts, right? So I was noticing that there was an inverse correlation where we were falling, right? And then price action was actually inclining on COSM, and that's already kind of weird because that's they're supposed to be running in tandem, right? So in this case, yeah, there was a very nice recovery on the Russell 2000 ETF, even in the futures contract. So this could potentially come back. For example, the futures, we could be retracing and bouncing from this SMA 200, and this could definitely come back to the SMA 200 and then bounce to the upside, which is also in line with the thesis that we're putting together. So let's look at the last part of the analysis here, and this is the RSI. Remember that this is the relative strength index, and this is a traditional setup. It just so happens to be my code. I put it together just so I can show you the color differences, right? Remember the upper half. Remember this, okay? The upper half is your bullish control zone. The bottom half is your bearish control zone. The color red here represents bear strength percentile. The top is the bull strength percentile, and the inner workings are the weakness, right? So this is bull weakness, bear weakness. And I'll go ahead and continue giving more metrics as we go. So we have an upside pivot here on the RSI signal, and we have crossed upside of the SMA 14, so that's very bullish. Let's take a look at this. So seeing that we have an immediate short-term upside, and then seeing that we have the bi-hourly coming up to the resistance of the SMA 14, it's telling me that we could be facing an immediate short-term drawback or drawdown. So that's why I'm saying that we can find a potential loading zone. Okay, so and if that's the case, then you can move on to the 8-hour time frame to find a pullback, to find support at this SMA 14 before a continuation to the upside, just like we have been doing, right? So now you can see that pullback is as clear as day. Right over here too. It looks like we're due for a pullback. First of all, this is about to enter the opposing side's gravitational zone where we can get pulled back, face that support from the SMA 14, this time frame being the 12-hour time frame, and then continuing onwards and upwards. Okay, so similar situation here even in the monthly. The monthly looks to be at a very, very nice support area, right? So this is the gravitational zone of the bear weakness percentile, SMA 14 right below us, nice bounce to the upside. But what I can say is that the larger term timeframes are going to need absolute push from the shorter term. So we would need all of the short term timeframes to cascade into each other and further and further and further to push into the macro timeframes. But everything is looking good. I think it's still okay. So that's kind of what I'm expecting for the days to come. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. With that said, I wish you well, a very, very good rest of your weekend, and I will catch you at the bell on Monday. Adios, team. Yeah.